going to video Align Technology stock. Just type it in Google, click enter, and this is the full name of the stock. It's ALGN is the Nasdaq symbol. It's 183.33 US dollar for one stock. It's a billion size firm, so it's a big size firm, and it's not paying any dividend. This is a very important sector to consider because any firm that is paying dividend, that means they're financially very strong, because after paying their loans, liabilities, creditors, they still have extra money. That extra money it pays to shareholders as dividends. This firm is not paying any dividend. It could be that they're not financially strong, or maybe they are financially strong but they choose to reinvest in their own firm to further expand. So there are many reasons to consider, but this is an important aspect. Let's go to Wikipedia and see when was this founded. Just see this box and you can see 1997. That's brilliant. Now I want to see what the employees have to think about it. Just copy this exactly from Google, paste it here, and type in the reviews. 83 reviews, 3.9 star. Read through the reviews yourself. Check out the salaries, the jobs, the question asked. Now let's go to Glassdoor reviews. And let's look at the Glassdoor. 283 reviews, 3.8 star. Check out the jobs listed, the salaries they're paying, interview question, the benefits they're getting, and the photos. Check out the reviews yourself. Just go to Justia Patents and check out the patents of this firm. Paste it here exactly. Click enter, and please look at assign your applicant because that's important, because they have full rights of the patents. I can see it has patents in 2002, 2013, 2004. A lot of patents. That's brilliant. That's a positive news. The more patent a firm has, the more stronger it is in the market and the more difficult it is to beat that firm. That's brilliant. And please check out for recent patents in 2015, 16, 17, 18, because that means that they're still innovating. In 2015 they have a patent that's a recent patent. It means they're still innovating. That's brilliant. 2015, 15, that's brilliant. 2016, that's a recent patent. They're still innovating, so that means they're very strong. That's brilliant. Check out the patents yourself. And 2017, that's a recent patent. That's brilliant as well. And now let me go to Yahoo Finance. I want to see that what the key executives are getting as salaries. That's a very important question for me as well. And I can see the stock symbol ALGN. Go to profile and check out the sector, industry, employees, and I can see that 2 key executive salaries have been shown. 3 are not applicable, they're missing. So please research why it's not applicable, because we need to know all the salaries of key executives. We need transparency, and so that's very important to find out. Research that why it's not applicable. Now let's go to macro trend and let's see the ratios. Click price ratio, price book ratio, and type in the symbol, and please have a look. If price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount. If price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. Right now I can see that it's 10.6. If somebody buys right now, they'll be paying 10.6 times more money. It's 10 times more expensive to buy this stock right now. If somebody who bought in 2018 September, they paid 26 times more money. They paid $391 to buy something that was $14 worth. It was 26 times more expensive. Somebody who bought in 2011 September, they bought it 2.61 times more expensive. They paid $15 to buy something that was $5 worth. Right now, it's 10 times more expensive. Let's go to other ratios and check out current ratio. If the ratio is less than 1, that means stock is risky because liabilities are more than assets. If the ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Right now, it's more than 1.5. It's a safe stock. Let's look at the previous trend. Has it ever been more than 1.5? I can see that since 2005 consistently up till now it has been always been above 1.5, so it's a very safe stock in terms of current ratio. Let's go to debt equity ratio. I'm looking for 0.5 or less than that for it to be safe. I'm looking for if the stock is mainly operating on debt or equity. Let's have a look. Right now I can see that it's less than zero point 0.5. It's a safe stock in terms of debt, and it has always been less than zero point 0.5 consistently. So that's brilliant. It's a safe stock in terms of debt equity, and it hasn't taken any debt before. It has just recently taken debt in 2019 March, but I can see that it has always been below zero point 0.5. So that means that this is a safe stock in terms of debt. Let's go to return on equity. I'm looking for 8% or more than that. Let's have a look. It's more than 8%. That's brilliant. Let's look at the previous consistency. Since 2013 up to now, it's more than 8%. Then before that, it's minus, then it's positive. But I can see that since 2013, since recent 6 years, it has consistently been above 8% return on equity. That's brilliant.